What are the top 4 questions to ask a mortgage lender in Northern Virginia? Well, that's what we're going to be talking about today. Here's the rundown. Hey everyone, I'm Darren Robertson, realtor in Northern Virginia with Robertson Residential Group and Samson Properties. If this is your first time here, be sure to hit that subscribe button. We post new videos every week and you don't want to miss anything. So, what are the top 4 questions to ask a mortgage lender in Northern Virginia? Question number 1, what kind of contract timelines are you comfortable with? A lot of people don't think about this when it comes time to talk to a lender about getting a home loan, but it's actually one of the most important things you can find out from your lender. So a typical closing period in Northern Virginia is about 30 days. There are some closings that are longer, and there's some closings that are shorter. In most situations, a seller is going to prefer a 30-day closing or less, depending on the circumstances. So if you're talking to a lender and the lender is saying, hey, I need at least 45 days to close this loan, that could be an issue. Bottom line, you don't want the amount of time the loan could take to close to work against you in the offer situation. So most local lenders in Northern Virginia can easily handle a 16 to 21 day closing, no problem. A lot of internet lenders and bigger banks might take longer to close a loan. So it's just important to ask the lender realistically what they're comfortable with, so that you're not surprised in any way when you go ahead and submit an offer on a property and put a certain closing date in the contract. The other part of this is finding out what kind of financing deadline the lender is comfortable with and what kind of appraisal deadline the lender is comfortable with. In contract negotiations, it can give you as the buyer more leverage if you're able to move through your appraisal and financing deadlines pretty quickly in the contract. Question number 2, are you easy to reach 7 days a week? So you'd be surprised how many lenders don't hand out their cell phone number. That's a problem. Real estate happens 7 days a week. It happens on weekends a lot. So you need to have a lender that you can easily reach over the weekend, at night. There are important contract questions that come up for lenders about financing timelines and important loan questions that come up, quick pre-approvals that are needed, all kinds of things that you need to be able to reach your lender very quickly over. Certain internet lenders actually don't even have cell phones. They just have an office line with an office extension. And when you call them on the weekend, you'll just get voicemail and you'll have to wait till Monday to hear back from them. And that can be a very big problem if you have a fast developing situation over the weekend with a certain property and you have questions that you need to ask your lender about very quickly. So again, typically good local mortgage lenders are very easy to reach via their cell phone, 7 days a week. Number 3, how do HOA fees and condo fees affect the sales price that I qualify for? So if you're buying a home that's not in an HOA, it's very easy for your mortgage lender to tell you what your max sales price is in terms of what you qualify for. If you have a condo that you're buying, and the condo has a decent sized condo fee, for instance, this impacts the sales price that you qualify for. So let's say, for example, that the maximum sales price that you qualify for, if you're buying a home that doesn't have an HOA, is $650,000. Well, if you decide to buy a condo, and the condo has fairly typical condo fees per month, those condo fees are going to impact that maximum sales price that you qualify for. So in that example, if you were buying a condo, you would qualify for a maximum sales price that's less than $650,000 because your lender is focusing on your qualifying ratios. So what your monthly payments are. When you have condo fees that enter the equation, that affects your monthly payments, and therefore it affects the sales price that you qualify for regarding your loan. So you just want to make sure that you go through with your lender different hypothetical sales prices and condo fee amounts and HOA fee amounts. That will minimize any surprises you have in your home search as you're looking over properties and deciding what type of property that you want to buy. Question number 4, what are the total closing costs in addition to the down payment amount? So the total closing costs for most homes in Northern Virginia usually come out to somewhere between 2.5 and 3% of the sales price of the property. And that includes not just regular closing costs, but also what are called your prepaids. Prepaids are when a lender escrows money for you on your behalf at closing, so that money can be put toward your homeowner's insurance for the year and also towards your property taxes for the year. Lenders arrange it in a way where you're able just to make one monthly payment to your lender so that you don't have to worry about making your 2 property tax payments in lump sums each year and your homeowner's insurance premiums throughout the year. So it's important to talk to your lender about how much you need to save for both your down payment and your total closing costs that you'll need. So now you know the top 4 questions to ask a mortgage lender in Northern Virginia. I hope you've enjoyed this video. Thank you so much for watching. Be sure to hit the subscribe button if this is your first time. Also, be sure to check out my video on the top 7 tips on how to find the right real estate agent in Northern Virginia.